I'm going to highlight some of our regulatory endeavors from the past year. My name is Brian Fleetfoot. I'm Deputy General Counsel for Income Tax Policy at the department. We have a comprehensive list of all of the rules that we've adopted or proposed in your packet, and I'm going to highlight a few of them. As Colin said, we've devoted a lot of time and effort to the Leveling the Playing Field for Illinois Retail Act. We had proposed some rules that went into effect in January of 2021. Last fall, we had proposed some emergency amendments to those regulations. We encountered a little bit of a hiccup with those emergency rules, but we proceeded and were able to adopt permanent rules early this year, which clarified some of the definitions, changed some of the treatment of titled and registered property. The original rules had excluded them from the treatment. As we got more into administering this law, we realized that was an incorrect interpretation, and so we've changed those rules. We've taken the position that there are no occasional sales with regard to marketplace sales, and also provide for taxpayers that only make exempt sales. After we cleaned up the Part 131, then we turned our attention to updating the parts of the rules regarding the retailer's occupation tax and use tax that needed clarification based on the Illinois, the Leveling the Playing Field for Illinois Retail Act. And so the amendments that we adopted, again, we've taken the position that there are no occasional sales over the marketplace. We've given guidance on drop shipments. There was a statutory change regarding the treatment of auctioneers. They will not be considered marketplace facilitators. We've updated our safe harbor for trade shows and incorporating provisions that address the marketplace aspects. And then also our Wayfair Nexus rules have been updated. Once we finished that, we realized that there were some other provisions in our rules, particularly regarding jurisdictional questions. And so we took to task of updating those. So we've incorporated provisions for remote retailers, marketplace facilitators, and marketplace sellers. And we've added new subsections to address them. And then rather than repeat those provisions in each of the sections, so the retailer's occupation tax, the use tax, the service occupation tax, the service use tax, we put them all in one section and then incorporate by reference. We did get some pushback from JCAR on that. They were a little hesitant to that concept of incorporation by reference, but we were able to convince the staff that is a better approach, because then when you're updating it, you only have to update it once. And now moving on to income tax, there were a couple of pretty significant changes. One I don't have on here, but there was a provision in our rule regarding throwback and throw out, where we had said that if there was a treaty provision that prevented you from having to pay tax in the foreign country, that we would consider you not to be taxable there. We changed that rule to align ourselves with the model rule that's the Multi-State Tax Commission and other states follow. So irrespective of any treaty, if you have taxable presence in that foreign country, those sales will not be subject to throwback or throw out. Secondly, we have been lobbied for a couple of years now by business in interest regarding the extended due date for the corporate income tax returns. Back in 2017, the IRS changed the due date for most corporate returns from March 15th to April 15th. That had the effect of aligning the federal extended due date and the Illinois extended due date. And so we amended our rules to reinstate that extra 1 month after the federal due date to file the state return. So we listened and we responded. And then finally, there were some statutory changes regarding losses. First, from Public Act 102-16, which was the fiscal year 2022 Budget Implementation Act. The net loss deduction was capped at $100,000 for three years. So we amended the rule. And then there was another change made by Public Act 102-669, which was the Rev Illinois Act from last fall, which extended the period for carrying losses from 12 years to 20 years. The statute was worded in such a way regarding losses that were still available and how that extension would apply. So we tried to clarify that in this rule. As long as the loss had not expired by the effective date of Public Act 102-669, then those losses will be allowed to be carried forward 20 years. So that is the review of our rules. More to come. We're very busy and we're happy to have additional staff so that we can stay on top of all of the legislative changes, as well as our continued review of our rules to make sure that they reflect the current law. And be happy to answer any questions. We'll be sticking around as well to meet with you individually.